Hello and welcome to Business Lunch. I'm Nisha Podar, and with me as always is my co-anchor Pavitra Parekh. So Pavitra, let's take a look at the market. Not too bad to end the week with. It's still holding up in the green, but remember, considerably lower than the high point of the day, which was 75 points higher and comfortably above 17,900 levels that Nifty 50 had opened today at. But at the moment, it is with the gains of a little over 50 points, 17,850 levels. Strongly held at the moment. It's Bank Nifty, which is really showing huge amount of gusto, outperforming the key indices, 0.6% up in trade. And the financials are really leading the charge when it comes to the overall market momentum and positive outflow. Now, when it comes to mid caps, that is showing slight outperformance to the key indices and is looking quite comfortable. As far as advanced decline ratio is concerned, it's still neck and neck. But take a look at Adani Ports and Shree Cement. Shree Cement has been buzzing for a while now, and others like HCL Tech as well as Tech Mahindra are some of the other counters besides the big financial companies like State Bank of India and IndusInd Bank really doing well in trade today. Pavitra.
Oh, absolutely. The IT recovery is really sort of showing up. You mentioned Tech Mahindra, a bunch of the other ones. Take a look at Infosys. That has also moved to the high point of the day, and that is one pack to keep your eye out on. In reverse action, you have cement, which has come off the highs, right? So take a look at some of those names. They were, of course, trading with very sharp gains, and all of those, the likes of Shree Cement, Ultratech, Grasim, they've come off a little bit. But something like a Shree Cement, if you take a look at the past 5 days' performance, it's up around 20%. So it's definitely been, a week for the cement stocks. Also bring up Reliance Industries, so you can take a look at that one as well. Well, the market is holding up, with a gain of around 0.25%. Reliance is a little bit subdued in trade, as you have been seeing it. It's currently at the low point of the day as well, so around 0.5% lower on Reliance Industries. What's really grabbing eyeballs is what is happening to the cinema players. We had a sharp knock come through at around 11:30 or so, and since then the stocks are been under pressure. The likes of PVR, Inox, both tanking. I think this is after Brahmastra is getting negative reviews, so that is something to keep your eye out on as well. But that's what's happening with the market action. We're going to keep coming back to this. First up, let's bring you our top story. It is the World Electric Vehicle Day today, and Sonia is standing by at the big wall to tell us more about the adoption of electric vehicles on a global scale. Sonia.
Thanks a lot for that. So on the occasion of World Electric Vehicle Day, we decided to stack up the numbers to tell you about the global adoption of electric vehicles and how it has progressed overall. The electric vehicle market across the world has grown at a compounded rate of 50% between 2019 and 2021. Within that, China is taking the lead, US is catching up, and Europe is falling behind. Now, China has the largest and fastest growing EV market in the world, and the number of units sold in China has risen from just 10.6 lakhs in 2018 all the way to 31.6 lakhs in 2021. Even if you compare 6 months of the calendar year 2022, China's sales have risen from 11 lakhs all the way to 23.7 lakh units year on year. Let's now move to the US markets. The US electric vehicle market size was just $24 billion in 2020. The market is projected to grow from $28 billion in 2021 all the way to $137 billion in 2028. That's a compounded growth of 25% between 2021 and 2028 period. Now, India, which falls under the rest of the world region, has seen outsized growth of 90% in electric vehicles in the last 3 years alone. Over the last 3 years, if you look at it, sales of EVs in India have risen from just 4,800 units in 2020 all the way to 19,750 units in 2022 so far. That's a growth of 300%. Company-wise, of course, we know that Tata Motors is the largest selling EV company with sales of 17,855 units in 2022 so far. However, there are still many challenges in the mass global adoption of EVs. The biggest issue, as we know currently, is the energy crisis across major developed cities in the world. California, for example, has asked electric car owners not to charge their electric cars during peak hours because of the load on the power grid due to the heat wave. Even in India, issues like range anxiety, lack of charging stations, inadequate battery swapping technologies are some impediments to the fast adoption of EVs. Nevertheless, the future is looking bright and India's electric mobility journey is gaining momentum. KPMG, for example, estimates 50 million electric vehicles on Indian roads by 2030. compared to, guess what, just 1.4 million currently. Back to you.
All right, Sonia, thanks so much for giving us all those details about the adoption of electric vehicles. Of course, the technology evolution, therefore the price points, as well as the infrastructure build-up. These are key to the adoption and faster adoption going forward. But we'll stay with this particular development and this theme today. On the occasion of World Electric Vehicle Day, well, Tata Motors announced the expansion of its EV portfolio with the launch of the Tiago EV. Now, the company is also committed to launching 10 electric vehicles across segments, and our colleague Parikshit Luthra caught up with Shailesh Chandra, who's the MD of Tata Motors Passenger Business Unit, and began by asking him about the kind of growth expected from the electric vehicles in FY23. Let's listen in.
The journey in the last 3-4 years as far as electric vehicle car industry is concerned, I remember that in FY19 this industry was at about 2,000 annual sales level, and last financial year in FY22 it ended at roughly 22,000, which has been a steep growth, 10 times growth in just 3-4 years time period. So far in the 5 months of this financial year itself, the industry has done about 20,000 already, which is pretty close to where the industry was for the full financial year FY22. So I clearly see that the industry by this financial year end would cross 50,000 is what I anticipate, given where we have already the volumes that has already been attained by the industry in the first 5 months. So this is where I see the industry moving towards.
Right. And what about Tata Motors specifically?
So, you know, we have been literally 88% of this market so far, and we have done about 17,500 kind of a volume, and we should also target closer to the 50,000 mark is what our effort would be.
All right, that was Shailesh Chandra, Managing Director at Tata Motors PV Business Unit. Remember, you can catch excerpts from this conversation all day today right here only on CNBC-TV18. But sticking with the auto pack, the Mahindra Group also launched its first fully electric SUV, that is the XUV 400 today. Pricing will be announced only in January next year, and the car will be Mahindra's mainstay electric vehicle till around 2024. Here's the word from M&M's Executive Director for the auto sector, Rajesh Jejurikar, on the company's EV roadmap. So let's hear him out.
Very important milestone for us because it's our first electric SUV, and it's World EV Day tomorrow, which is the 9th of September. So we are very, very excited to launch our first electric vehicle on this milestone day. Customers will take time to move, and hence we think this is a launch where we need to give time. Okay. Right? It's a category evolution and a category creation. We want people to experience the product and not get into a here's a product, let's start booking tomorrow. So, you know, it's being planned in a way that we reveal today, and we take the next 3-4 months to get customers through events, experiential drives, to experience us, and then we open bookings in January. Value proposition is important, but we are not necessarily into the A to B fleet operator segment. We will bring out products which excite customers, which customers feel passionate about, and the 400 is the first in that journey. Between now and 2024, we have no other launch in the electric space. So this is going to be our mainstay for the next couple of years.
All right, lots of momentum there on World Electric Vehicle Day, the future of mobility. Let's take a short break on that note on Business Lunch. But remember, mutual fund data for the month of August shows that equity inflows have slipped to 10-month lows. More on that story when we return.
Hey guys, welcome back. You're still watching Business Lunch, and let's now bring you some interesting opinions. Speaking to Shireen Ban, the HSBC Group Chief Executive Noel Quinn said that they look to remain invested in India for the long run on the back of strong consumer demand as well as consistent growth. He said he also expects India to become a big global supply chain player. So let's listen into that chat.
Very strong growth, the numbers are good, stable political situation domestically, good foundations in place with the digitisation of the economy, strong consumer demand domestically, and increasingly becoming a supply base to the world. So very optimistic. I'm really pleased with the growth we've seen, and the great thing is it's been consistent for the last 10 years. And that was one of our ambitions. Not start, stop into India, out of India, but consistent growth, consistent investment, and be a sort of a reputable player that people can rely on. We're dependable, and we're there for the long term for India. And that's my plan going forward. Geopolitics is one of the factors. I think COVID made an awful lot of buyers realize they shouldn't be over-dependent on any one source of supply or any one particular supplier. I think people are adjusting supply chains for a range of factors, and they're sourcing from multiple countries and multiple suppliers. And I think India has huge potential to be one of those suppliers going forward. As a bank, we're not getting into the crypto world, crypto trading, crypto exchanges. I do worry about the sustainability of the valuations of crypto, and I have done for a while. I'm not going to predict where it will go in the future. One of the problems with crypto for me is it's hard to predict where it's going to go in the future. It's too volatile. And as a product, I question the suitability of that product for many of the consumers in the marketplace today. So that's why HSBC is more negative on crypto than other banks.
All right, remember to catch the excerpts of that chat with Noel Quinn, the Group Chief Executive at HSBC, all day today, only on CNBC TV18. Now, the government's draft national electricity policy envisages 500 gigawatts of renewable power capacity by the year 2030. My colleague Vivek is here to tell us more about the policy and the companies that have a part to play in executing this policy. Tell us, Vivek.
Well, that's right. The Government of India, the Ministry of Power and the Central Electricity Authority have released the draft electricity bill. Now, this particular bill mainly assesses, the current supply-demand situation as far as all of the modes of power production as well as supply is concerned. Now, also one important development is the fact that they've also come up with a plan in order to address the 500 gigawatt renewable energy requirement that India will have as far as the year 2030 is concerned. So now when you're looking at this particular development, the additional capacities that are required, you're expecting almost 280 gigawatt of solar capacity addition, coal another 28 gigawatt, wind 90 gigawatt, and nuclear around 15 gigawatt. Now, the important part is when you're talking about the demand, the peak demand that is expected, when you're talking about the year 2027, the peak demand expected is almost 272 gigawatt, and the peak demand for 2032 is almost 363 gigawatt. And the government has also identified the various steps and the various modes of power supply that will be required in order to go ahead and give this particular development by 2027. So by 2027, coal, you will require an additional 33 gigawatt of coal additional supply, and this is something that's a slight surprise given the fact that India is looking to go ahead and increase the renewable trust. When you're talking about 2032, what is actually required is another 18 gigawatt of conventional supply, and where coal will have an input of almost 9 gigawatt. By 2032, the expectation is that wind will have 53 gigawatt of supply required, of solar 147 gigawatt, and others around 11 gigawatt.
All right, Vivek, thanks a lot for getting us all of the details on the draft national electricity plan. But with that, let's move on and talk about the mutual fund data for the month of August, which was just released a short while back, and it indicates that equity inflows have now slipped to 10-month lows. Sumaira is here with all of the details and the numbers. Sumaira, seems like yet another weak month.
That's true. It's a disappointing month for equity mutual funds. If inflows have dropped to a 10-month low of under 6,000 crore rupees. This is largely because investors fear that there could be market volatility ahead and are using this opportunity, either to consolidate their portfolios or even take profits off the table. And distributors are using it also to churn money into NFOs. So if you look at the equity flows of 5,900 odd crores, a little over 3,000 crores has come in from new fund offers. However, SIPs are holding up at over 12,600 crores. So at least retail is keeping the faith for now. Fixed income looks to be stabilizing now with 49,000 odd crores of inflows coming in. But here again, apart from liquid funds, flows are muted because of little upside seen in returns and the quarter end withdrawals as well for advanced tax purposes. Hybrid funds are seeing net outflows for the third month, primarily on account of money going out of arbitrage funds. Here what was happening was that, spreads had shrunk and so returns were negative. But now that returns have become positive again, people are preferring to get out of arbitrage. Other categories like Balanced Advantage too have inflows which have reduced within the hybrid basket. But it's been another fabulous month for passive funds with inflows in excess of 15,000 odd crore rupees. The industry assets under management have swelled to over 39 lakh crores as NAVs have increased. But it is this perceived market peak which is leading to investors worrying that there could be a drop ahead.
All right, Samira, thanks so much for getting us all those important details on mutual fund flows. Now, the world's longest reigning monarch, England's Queen Elizabeth II, dies at the age of 96 after ruling over the United Kingdom for 70 years. We get you more on that after this very short break. Stay tuned. Welcome back. You're watching Business Lunch. A quick look at the market. And yes, market is losing steam pretty fast at the moment. In fact, touching on the flat line, 0.1% up on Nifty 50, just 20 points gain at the moment. And also defending that 17,800 level. Remember, that considerably lower than the high point of the day, which was around 17,925 level for the day. So yes, profit booking, and that has been across the board. Some of the high intensity stocks like Adani Ports, even Shree Cement and other cement companies and financials have lost some ground from the top and have seen some profit booking. So Bank Nifty is now considerably lower, 0.3% up in trade, and also mid cap. So broad-based profit booking that is being seen. Will this be a trend reversal from here on for the day? Needs to be watched out for. Let's get you some important global updates now then. EU energy ministers are due to meet today in Brussels to really discuss the price caps on Russian gas imports and also devise a potential plan to ease the burden on the consumers. In fact, CNBC's Annette Weisbach is here to get us all the report from Brussels.
The Czech energy or economy minister, I should say, has summoned that emergency summit here today in order to come up with a common solution and also to come up most likely with liquidity measures for utilities and the industries, because clearly it is an emergency situation and we are only at the beginning of the heating period. So perhaps we take a listen of what the minister himself told me just earlier on which proposals are on the table and what is he is expecting from that meeting today.
There are many offers how to solve the problem. Some of them, I think, we have the understanding this is something which can work. Some of them might need more discussion. We have to understand that we are facing a really big energy crisis, which is mainly driven by the war, the economic war between Europe and Russia. We don't need to play with the words.
All right, that is the latest on the EU energy crisis. We're, of course, tracking this closely and we'll keep bringing you updates. But with that, some somber news that came through last night. The world's longest reigning monarch, the United Kingdom's Queen Elizabeth II, passed away last evening at the age of 96 after ruling over the country for 70 years. She was 96 years of age and died peacefully at her estate in Balmoral in Scotland, according to a statement from the Buckingham Palace. CNBC's Jeff Cutmore joins us with more on this.
Let's listen to the UK Prime Minister Liz Truss as she reflected on the Queen's life and the meaning of her passing.
It is a day of great loss, but Queen Elizabeth II leaves a great legacy. Today the crown passes, as it has done for more than 1,000 years, to our new monarch, our new head of state, His Majesty King Charles III. With the King's family, we mourn the loss of his mother. And as we mourn, we must come together as a people to support him, to help him bear the awesome responsibility that he now carries for us all. We offer him our loyalty and devotion, just as his mother devoted so much to so many for so long. And with the passing of the second Elizabethan age, we usher in a new era in the magnificent history of our great country, exactly as Her Majesty would have wished, by saying the words, "God save the King."
Now, a lot of people will be looking to their newspapers, they'll be looking at the online media for some guidance as to how events are set to unfold over coming days. We suspect that the period of mourning will run from something like 10 to 13 days. You know, there have been years of plans being put in place for the days that follow and the events that will be held to mark the Queen's passing. But it is just worth saying that the whole situation is a little bit fluid, because ultimately it will be King Charles III, when he comes back to London, who will meet with royal officials and who will ultimately sign off on the finer details of the plans here.
All right, end of an era for Queen Elizabeth II. Well, with that, it's a wrap on Business Lunch, but keep an eye out on the market. The market has slipped in the red. The key indices have lost steam, so keep an eye out on that. And Mid Cap Radar comes up next.